welcome everyone to the Flow podcast. My name is Konstantin Shulga. I'm the CEO and the co-founder of Finery Markets, the leading ECN and crypto software as a service for institutions. And on our series of podcasts, we talk about the market structure with industry leaders. And today we have a great guest, Kevin, who is the founder and the CEO of the Keyrock. So Kevin, really great to have you here.
Thank you very much. Thanks for having me.
So let's kick off with some backside story. So you did not start in TradFi. You're like the real crypto native person who is coming into the market making world of the crypto native industry. And in one of your interviews, you mentioned that you met your co-founders in the bar, which which is not probably like a typical story for someone to meet like a co-founder to build a multi-million or a multi-billion-dollar business. So, and at the time you were working at a big consulting company. So can you share a bit more details about what inspired you to shift into the crypto industry, and tell us a bit more about your story?
Yeah, happy to. So we met at the bar, but it was during a crypto conference. So there's still somewhat of a link, some connection. Yeah. So it was at a small conference actually outside of Brussels, a bit of a countryside in Belgium. It was called a Fin and Tonic. So they were kind of mixing gin and tonic and fintech, and it was about crypto that day. It was back in very early 2017. And so that's where we met. And indeed, I was working in consulting before. And I mean, the backstory is, so I discovered Bitcoin and blockchain in 2014, and that's when I started to be more and more interested into it. I worked in a consulting firm back then, and I remember basically I sent an email to the partner that was in charge of financial services at that firm. It's okay, a crypto market cap is 3 billion. It cannot be ignored anymore. We need to do more about it, and cover this market as well. And so okay, let's do something. But of course, none of our clients were doing anything with crypto or blockchain in 2014, 15, and so we just started to kind of write papers and thought leaderships and so on around.
And you were still employed with
I was still like management consultant there. But so I got into it more and more, and into Bitcoin, blockchain. Then ICOs were starting in 2015, 2016, 2017, and basically back then the main question was like, why are those ICOs so popular? Like I didn't understand why it was like these markets were growing so fast, and of course there was a lot of greed behind it for sure. But we figured like there had to be something else, and the way we looked at it is that ICOs were basically Kickstarter campaigns. Yeah. Like they were Kickstarter campaigns, but the difference is that instead of having just a coupon from your Kickstarter campaign where you can buy the first pair of sneakers or whatever when they come out, you have a token. And that token, you can trade it very easily. So that the coupon is tokenized to some extent, and you can very easily trade that coupon, on secondary market, exchange it, and so on and so forth. And so we saw that this digitizing this asset that was a Kickstarter coupon made it potentially more liquid, made it easier to trade, and that is what brought so much interest on the market. At the same time, we saw that this market being partly built on decentralized technology, the barriers to entry were quite low, and so you had a lot of different marketplaces popping up. You had a very fragmented market, and so liquidity was actually a major problem. And so it's really putting the two things together that led us to create Keyrock in 2017. And yeah, the motivation to leave a well-paying job, I mean, is just, I wanted to build my own company basically, and that's what I've wanted to do from, for years. And I was in consulting, but kind of learning new skills, and it was a great way to continue university. But I was reading and actively writing things about crypto and blockchain like all the time, and I wanted to launch my own company. And so actually there was no.
And what helped you grab the information? Like what were the main sources back then in 16, 17?
I mean, it was already Twitter and CoinDesk, and I mean there are a lot of other news sources since, but that was most of it was on the internet. And so it's really there was no hesitation. Like it was something I wanted to do, and then we saw this opportunity with my two co-founders, like a clear added value, a clear problem to fix, and then we got started basically.
Sounds great. So how did you find a common ground with the co-founders? So how did you share the roles when you just started Keyrock?
I mean, I think what is extremely important is that we are very, very complementary, which means that we're very different actually. But so my two co-founders, we have very, very different profiles. So we have Jeremy, of course, is our CTO. So, he's on the technical side, and Juan and I are both to some extent on the business side, right? But we are extremely different between, I'm more kind of, a structured guy, very organized. He's a lot more connection with people, innovation, commercial. And so we just had very complementary profiles, but with those differences, we had a very clear, I guess, common ground as to how to function and our willingness, where we wanted to go, and our willingness to be very transparent and to be very honest in all our collaborations. So, of course, we disagree on many things, but we have a way of functioning that we always bring things forward. We discuss it, solve them, and move forward. And that transparency, plus the fact that we are very complementary and therefore different profiles, that's what really made it work.
And did you have, like, from the day one, did you have the common vision of what exactly are you building? So you were going to do the market making, or you were going to do some like OTC client facing business? So how did that evolution
No,
happen?
I think that you honestly no, like clearly not, because it's not that we didn't have a common vision, because I think that you build that common vision together, and as you go along as well, like you start with a problem we started with a problem that we wanted to fix, and then by actually trying to do that, you iterate on the market, you talk with clients, you talk with partners, you realize, oh, the need I had in mind actually what isn't there exactly how I thought it was going to be, so I'm going to do a bit, like, it's something that constantly evolves, right? So I don't think that I don't know, right? I'm not Elon Musk, right? But maybe some guys start with a 10-year plan on the company and actually execute it year by year, fair enough, or they have a good marketing around it. But I think that you actually figure it out as you go along. And so you make plans for you start something, you see an opportunity, you see a problem, you start fixing it, and you have some sense of direction for the next X years, but then you refine that as you go along. And so it's not so much that we had to, I guess, find common ground between three different visions, is that we build together one common vision as we did things together, basically.
Makes perfect sense. And talking about the history of Keyrock, so when we prepared for the podcast, we found out that in 2019, Keyrock was honored like a Deloitte's Rising Star Award, yeah, which, by the way, Finery Markets occasionally also got nominated and basically awarded for the same award last year. So thanks a lot. So I guess we're sharing some of the same path. So how did that transitioned from like back in 2019? So do you still treat Keyrock like as a startup, as still a rising star, or it's like a fully matured market making from your perspective?
It's so we made a lot of progress since 2019, luckily, right? I think we're about 25 people. We're 180 now, so we grew quite a bit, but compared to where we want to be, like, we're still at the very, very beginning. Like, I think that eventually all assets will be digital, right? Crypto is kind of a proof of concept of how you can digitally represent value. I think that eventually all assets will be digital, which means that all financial markets will be based on the same technology as crypto today. And what we want to build is one of the largest financial institutions in the world. So from that to where we are now, 180 people, we're definitely not a fully mature business. We're just getting started. But since 2019,
what's the end game for Keyrock in particular? So what is the big vision that you have for Keyrock?
I think that eventually what we want to be is kind of the neo investment bank for digital assets. So like our competitors in 10 years, hopefully they'll be Goldman Sachs, JP Morgan, and be competing with them. That's what we want to build.
Well, sounds ambitious. So good luck with that. So before we jump into the weeds of the market structure and the main topic of our podcast, maybe you can recommend kind of a couple of books that inspired you throughout your journey, and if you maybe highlight one book which is more of a personal and something like professional for the industry. What do you think?
Sure, I think that I don't know if it's not personal, but one that really inspired me, like in the business and how we run the company as well, and kind of the culture that we put together, is called Reinventing Organizations. It's actually a book written by a former consultant, but it's about having new types of organization, like going out of just pure, very classic pyramid type of hierarchy, when people are just coming to work, being like the work person, and they do what they're told and that's it, and how do you go from that, from an organization that's much more flat, where people are very empowered, and you hire people, give them a direction, and they kind of autonomously decide how to do it, where to go, and something with a lot less kind of hierarchy and strict structure. So we don't have the perfect kind of blueprint from the book on a fully, flat organization. We don't have that, but it inspired a lot of things. And so it's a book that I found really to be very, very transformative for me when I look at companies. So it's reinventing organizations. It's
we'll add it into the link below. Yeah.
Cool, perfect. And on the industry itself, on finance and the markets, I mean, I don't know if there's one that particularly stands out. I mean, there's a few that are more around entrepreneurship. Like I really love the hard thing about hard things by Ben Horowitz. I thought that was very good. And I mean, given I think that the man who solved the market, with the passing of Gene Simmons recently, it's a fitting one, and was also very, very inspiring. Like somebody that started something from scratch, was really kind of a trailblazer in algo and kind of systematic trading. And so I think that's quite fitting.
Yeah, being the legend not only within the fintech space but just overall for the like the charity, the industry. So yeah, it's great. Perfect. So now let's talk about the market structure in the digital assets. And once again, you are not coming from the TradFi. So that is also, I think, great, because next, the entire crypto industry was able to bring the next generation of technology, the next generation of talent that is crypto native. But if we talk about the electronic trading, the market making, what really makes it successful in the TradFi, it's the combination of factors like infrastructure, that you need to have the proper connectivity, you need to have the DMA or SMA access, you need to have the fastest possible market data, which I think is quite true in the crypto space as well, like the risk management and lots of other different things with integrity. When you start doing client business, it's also like the regulatory and compliance thing, which is a completely different dimension. So can you mention what is the necessary infrastructural points, or maybe not only the infrastructural points, to be successful these days in the crypto industry, and particularly for the market making business?
Yeah, I think honestly the barriers to entry are a lot lower. Like it's starting to be a bit more, but if you look, like, what does it take to be a market maker? You just you open your account on whichever exchange you trade on, right? So you just log in, open the account, you put 2 orders in, there you go, you're a market maker. So that's all it takes. I mean, that's without thinking about algo trading and low latency, but if you're in TradFi, you have to be a member of an exchange, and it's completely different. Like the access is just so easy in crypto that the barriers to entry are a lot lower. Then when it comes to actual, I guess, technical infrastructure, I think that for certain things it's harder because it's a much more fragmented market. So when you think about price discovery, you cannot just optimize your connectivity to a single source of price. You need to do it in potentially 50, 60, 70 different marketplaces, right? And some
especially
of them
with the regulatory changes.
Yeah, exactly. It changes all the time. Some of them are centralized, some of them are decentralized. So for that, it's a lot more complex, right? But at the same time, the fact that there's such a high fragmentation means also that there's a much more price discrepancies, right? So the opportunities are much larger as well, which means that you need to overcome those initial hurdles to connect to all the pricing sources. But then and that was especially the case in 2017, the opportunities are so big that you don't need to optimize as much as what you would see on TradFi, in terms of low latency. What is low latency in crypto is very, very high latency on the equity markets.
Yes.
Exactly. So it is much like, it isn't as optimized yet because it's much more fragmented as an industry. But so it does come with different challenges. I think that one of them as well is, compared to we had to build everything ourselves. Like we started in 2017, started to trade, like connecting exchanges. We could not rely on any existing vendor for anything. So that is also a very big difference. So I think that all in all, the business is the same. Making a market is making a market, but what it takes to get there, I think, is really tremendously different in digital assets. And I believe that it's going to continue to be very different because just of the speed of innovation that we see in digital assets. I don't think that we're going to have the same level of standardization and aggregation that you see in TradFi. It just, given that there is a very big notion of decentralization, like innovation, it's just compounding, right? And there's a lot of composability, so people build on top of one another, like innovates all the time, which means that it remains fragmented. So I think that the technical and infrastructure needs are very, very different than what you see in traditional finance.
If you summarize like some of the key factors to success for that particular path for Keyrock. So what do you think that, like, is it, you mentioned one is that you've built everything yourself, so it's in-house. Anything else that you can mention?
I mean, you need to combine to have a nice trade-off between, you know, how many price sources do you have access to, but also how efficient you can be on each of them, right? If I trade on one exchange, like everything, my connectivity, my price feed, my execution, everything is going to be optimized for that one exchange, right? So of course I'm going to be able to go much deeper, have really a specialization. But then if I do that, I'm missing like 50 other price sources that I could use in my pricing model to make, you know, to be more competitive. So you need to, but if you connect to everything, you're not super good on any of them. And so this balancing act is very, I think, very important and clearly a key success factor to be market making in crypto spot.
Makes sense. And let's talk more about fragmentation that you mentioned as well. I'm coming from TradFi, so I've spent 16 years in electronic trading, 70% on that within the equity space, which is becoming more and more fragmented, like probably 30% within FX, which was one of the most fragmented asset classes. But crypto is for sure the most fragmented asset class. We have hundreds of different, or even maybe thousands of different venues that sometimes pretend to be price discovery venues. We have the OTC, we have DeFi, and now we also have exchange traded products, which adds another layer of complexity. But when the industry started, and even like a few years ago, there was a lot of, I would say, like Wild West practices for lots of different exchanges that were doing like the wash trading, lots of other things that are not yet fully regulated in crypto. So how do you see that market landscape changing, and how did Keyrock was fit into some of those like models, and how did you see that impact how the Keyrock changed over the last 5 years?
So I mean so clearly it's not there's, I think the market as a whole has matured a lot, right? So it's a lot better. I was actually discussing yesterday on a panel about the rise of crypto derivatives and the role of prime brokers, you know, in mitigating counterparty risk versus what we saw in the past after FTX. And so we see all of these kind of pieces of the puzzle coming together that, you know, clearly shows that the market has matured. But then there is still a lot of things that are, you know, completely unacceptable behaviors on the market, both on the side of exchanges where there's still some volumes, you know, that make absolutely no sense, honestly. There's a lot of unacceptable behaviors, you know, in the side of many market makers as well that have way too much power on the market and I'm not using it as they're supposed to be. So there's still some of that, but if you look for the last 5 years, clearly there's been a lot of progress, and it's a market that is becoming a lot more mature, and regulatory clarity helps a lot with that. So it's, you know, now if you look at Keyrock itself, and it's the reason why we welcome to have as much regulatory clarity as possible. Like from the very beginning, we kind of decided what makes sense and what doesn't make sense. What are we going to do, and what are we not willing to do? The first slide on so we started from the start as a client focused business, like providing a service to token issuers. The first slide on a commercial deck in early 2018 was, this is what we do not do. We do not take price targets. We do not create fake volume, wash trading. We do not, you know, we do not take direction on the tokens. All of these are things that we, on the first slide, like, guys, we're not going to do this. And believe me, in 2018, we were turning down 75% of our clients.
I do believe you, yeah, because I guess this was like sacrificing a big portion of the potential revenue, which might lead to like a short-term success, which definitely not leading to like mid to long-term.
Exactly. So I think that it's what you point there is exactly what matters. Is basically what is the time horizon that you're optimizing for. And so, as I mentioned, right, if you want to be one of the largest financial institutions in the next 10 years, I don't care about taking on a shady deal for the next quarter just to optimize, you know, my top line in 3 months. We don't care about that. And that mindset is something that we've had, you know, since the very beginning, that I believe is essential if you want to thrive in a market that is still, you know, getting less and less of a wide west, but still where there's a lot more a lot less clarity than what you would see on very traditional markets. So when there's so much noise, so many different things happening, having a very clear line and optimizing on a long-term time frame, I think has been the most, you know, important part of our development over the last few years.
Yeah, and it's great to have someone who shares the same long-term vision for the industry, because I think when it just started, everyone was trying to do like lots of the things at the same time and also bearing a lot of conflicts of interest. I'm not even talking about FTX, but lots of different crypto native companies started without any Chinese walls within those banks. And talking about the kind of Goldman Sachs of crypto, Goldmans of the world, they do have a pretty like strict policies on what can they do and what they cannot do. So that's great to see someone sharing the same.
To be fair on that, like it's something that they have, but that they built over the years, right? Because it is something to also take into account. Oh, but look how good or how bad crypto is versus traditional finance. I mean, all the controls and all the clarity that there is in traditional finance was built over years and years and years and years, right? And
these things are there for a reason.
Exactly, they're there for a reason, and they were not there from one day to the next. So it is something that takes time, and so this process of maturing in the market is something that is completely normal and to be expected, basically.
Exactly, and like I also remember back in the days using like MF Global and Knight Capital, which were both one of the leading electronic trading brokers, and due to some with MF Global case, I guess, was a conflict of interest, which basically realized, and that led to bankruptcy, probably like a similar size of the impact of the FTX. And now we see this industry debundling with actually separating the services of market making, execution, clearing, custody. How do you see that trend being a market maker? Do you agree that we have the debundling, or do you agree this is something necessary for the industry to be successful?
Yeah, I think it's definitely necessary. When you think about like the main problems that we have now on the market still, like in terms of counterparty risk, in terms of inefficiency of capital use, all of this comes by slowly but surely separating what you do with assets and where you store them, basically, and how you actually use them. And so I think that having that separation is something that makes complete sense and would make my life as a market maker a lot easier, right? Because when I trade on 15 exchanges, I trade spot on 15 or 20 or 50 exchanges. Yep. I'm taking a counterparty risk with each of them. If I could have, one PB in the middle, where I can actually have a lot more efficiency on my capital and only one, clear counterparty risk with, a specialized entity, it's something that makes a lot more sense for me. So it is definitely something that I believe will happen on the centralized part on the market, right? Yep. But then the logic is not here. We don't want to rebuild the exact same thing as before, right? What is interesting is also to keep options and to have optionality between centralized and decentralized. So I think that what you see on DeFi, then it's a completely different world of possibilities. Will also that therefore come with problems in terms of capital efficiency, right? But then that's the whole kind of DeFi conundrum, so to speak, is how do we keep the advantages and the very ethos of going towards a more decentralized paradigm in which to exchange value, but also solve some of the major problems that we see in its current iteration, right? But I think that, it is an evolution that makes sense and that we're seeing more and more on the market.
Sounds great. And I think, with the introduction of ECNs, I think this is also going to make the life of lots of market makers easier and safer. And we're looking exactly. Looking forward to see how the market evolves in the next few years. And talking about the market participants right now. So in traditional markets, there's been like an arms race for many years across all the leading algorithmic trading firms and all of the HFT giants, like Virtus, Jumps, Citadels of the world. But we see right now most of the names are not in crypto, or if they are, they're still competing with some of the crypto native firms like yourselves. So do you see that crypto enabled kind of the next wave of algorithmic trading participants? And do you still see the room for a new participant to enter the market like in 2024?
Yeah, sure. I mean, definitely. I think I would say yes on both questions, right? I say it's disruption always comes from new markets that are initially less interesting, right? And that was the case with crypto. It was started very small, and so it wasn't interesting to many of these guys, but now they are very much on the market. I mean, if you look at even on our token market making business, we're competing with flow traders like all the time, and Virtu is on this market. You look at EDX, which is a new exchange that's launched by Virtu and Citadel, like they are already there. Like Tower is trading. Jump was very much involved, a bit less now, but like these guys are already there. But so I think that indeed having this new market being created 10 years ago, it's something created kind of aspiration to attract new players and a new set of large algo traders that we are a part of. Is it something that is going to continue? Is there more space? Like there's always more space. Every time, like there's the speed of innovation on this market is just absolutely ridiculous. So there's new financial primitives, new types of venues, new ways of trading that is being built every day. And yes, we always want to keep up, but for sure it creates opportunities for others, to emerge and to start something new that we and others might not be active on yet, and develop new actors in the market. I think that there's always more space, basically.
So we'll see for the who will be the next wave of the market participants. But if we talk about the other way around, is Keyrock willing, and if yes, is it ready to compete with some of those industry leaders in the traditional space in FX, equities, or like any other asset classes?
So for us, we are competing with them already on digital assets, right? And that's for me, that's our market. It's digital assets. That's what we compete on. But then how far is like when we trade on stables, that starts to be very close to an FX market. We're trading there and doing very well. But then eventually, I think that all assets will be digital, and we want to be providing liquidity to all digital assets. So one day, of course, we're going to be trading on equities, but it's going to be digital equities. So
you want them to come and fight them on your battlefield, basically on the digital assets landscape.
Yeah, they will, because this is where value will be represented eventually. So it's not that I want them; they can stay where they are if they want. It doesn't matter. But eventually, this is what the market will be, and on that, we'll be more than happy to compete for sure.
Sounds great. Well, we'll see. How do you think when we'll see more equities trading within the digital asset space?
Honestly, I don't know. It's everything that is a tokenization of real world assets. It's been like the topic for the last 5 years, but I think it's just extremely slow. And the reason for it is that there's already, very big markets that have a very high level of efficiency. They're lacking the decentralized part of things, and there are many things that can be made better, but there's a lot of momentum already to overcome, to start, all this investment in just the digitization of those markets, but in a centralized paradigm. So, now after all of this, let's start moving to something that is fully decentralized and rebuild part of this market infrastructure on top of that, something that is fully regulated. So it means that you need to have alignment of many regulators that have their minds absolutely blown by what is being done on digital asset. It takes a lot to overcome all that. And so the work is being done, right? And I think that in the last year, clearly, actors like BlackRock being, massive advocates for tokenization, it shows that this is where we're going. But simply, it doesn't happen like this. Those markets, like understanding how is the custody being done, what happens to clearing and settlement, what are like trusted third parties now, how can we get rid of them, what is the proper regulatory framework around that in different jurisdictions globally. This is something that is taking a lot of time. So honestly, I couldn't tell. But I think we always have it's somebody much smarter than me and say you always underestimate you overestimate what you can do in 1 year and underestimate what can be done in 10, right? So I think it's a bit that, like, I don't imagine we're gonna have like a massive fully digital equity markets in 3 years, but what will be in 10, I think we'd be surprised, because it just economically makes much more sense.
Yeah, I see. And so probably not only on the trading side, but the post-trading side, that's where it brings way more efficiency into the entire ecosystem. So talking about efficiency, I guess you read the Flashboys book, which is, well, it's criticized in the professional industry because of its like exaggeration, and it's making the entire industry look a little bit weird. But still, the point of the book is that speed matters, and there is some, I would say, perception that a lot of the industry is built in a big portion of the industry is built in the so-called two-tier system, when the more advanced market participants are getting advantage of the retail users and the retail brokers, because they have the better technology and just can do the front running and some of the other like bad market practices. So how do you see that happening in the crypto space, and if that's true or not from your point of view?
Well, I mean, I do think that first on the book itself, like there's another book that's called Flashboys, Not So Fast. That is very interesting to read as well because basically it shows that he has no clue what he's talking about in most of the examples. So it's nice to read both perspectives, right? So it's another one maybe to add, in the list of books to have a look at. I do think that, clearly different market participants have different capabilities, and so some traders are faster because they invested more in their capabilities to be fast because it is more important to them to be able to go get that last tenth of a bip because they are putting a lot more on the line, they're putting a lot more capital available in the market. As market makers, you're sitting ducks, right? You just put orders, you announce everything. This is how much I'm willing to transact at what price. You're out there. So of course, if you want to be able to do that without getting robbed all the time, you need to invest in your capabilities. And yes, being fast means that we are going to be able, in general, to have better prices than market participants that just come in and take a long position every now and then, and that's it, and are takers on the market. But what we need to look at is not us versus them, but it's just for most market participants, how better is the market conditions for them now that you have those very high frequency, trading firms. How much better is the liquidity? How much better are the spreads in general? And then you see that, yes, there are different capabilities, but you can extrapolate that. Some traders are smarter than others. So what? They have an advantage. How do we deal with that? Yet it's a free market. There are advantages. Companies that invest to be the fastest possible. But what matters is that at the end, for market participants, the fact that there are firms like ours that, yes, can trade very, very fast on the market, it means that we are willing to take a lot more risk than we would be willing to take if we did not have those capabilities, which means that we are going to offer much tighter spreads, and we're going to be able to do that even when the market becomes very volatile. So at the end of the day, it is to the benefit of all market participants. And I think that is something that is also very well shown in that other take on Flashboys.
Yeah, it's true. And if we talk about the innovations in the infrastructure, about like the speed of the trading, what was really innovational in the entire crypto space is the cloud-based nature of the infrastructure, because most of the exchanges operate in a cloud-based nature, which is quite uncommon for the TradFi, where everyone is fighting for like microseconds within the colo. So how do you see that? Is it good or a bad thing for the industry? Do you see more crypto exchanges and trading venues going offline with physical colos, or you think more TradFi will migrate into the cloud?
But I think it's so. Of course, things are slower, right? But I think it opened it up. Makes it a lot more accessible to the greater number, which I think also is in the end, to the benefit of the market as a whole. So, like, are we going to go towards more and more potentially a physical infrastructure? Like there is some exchanges that offer it. I do think it's still very much of a minority, right? Yeah. And so I think we're gonna have some of it, yes, but I don't believe it's going to be as extreme as what we see in TradFi for the same reason that why I explained initially on the fragmentation of the market. It's because there is that openness. I think that we're going to have different models that bring different strengths and weaknesses, which will make that I think this market will always be slower than what we see in traditional finance currently. But I do think that in general, everything that can break down barriers to entry and make it allow a great number of participants to actually actively be there in the market and build is something that is a net positive. So I would hope for it to continue and to keep having that kind of, I guess, to some extent, disparity of solution that, yes, comes at the cost of efficiency, but that allows a greater number to participate. So I think it was a net positive.
But what's your bet? And let's say in like 3 to 5 years, will most of the trading still happen within the cloud?
I think it depends how you define most, right? I think the number of individual participants, most likely. If you look purely at the volume, maybe not.
All right. It's an interesting perspective because all of the leading exchanges today are still in cloud. So we'll see. It's will be an interesting transition. Yes. One of the most the major events recently was the adoption of the ETFs. So how did that impact Keyrock's business?
I mean, it's it create like the ETFs is a good go-to-market, so to speak. It's a new distribution channel, right, for to gain access to Bitcoin and not to ETH. So it create, of course, a great demand on the market, which for liquidity providers, I mean, brought us business, right? So I think that it's been definitely a positive development, but I think it should be it's important to take that development to put some perspective into it. When you think about it, there's this whole movement to create digital finance, to create new types of assets that can be accessed in a fully peer-to-peer manner and custodied in a fully peer-to-peer manner, and creating this digital value. But this is so far from the current traditional market that we say, oh, let's actually take this, wrap it up, and put it into the old world so that they can get access to it as well. When you think about it, it's a bit backwards, right?
Yeah.
So I think we need to, of course, be enthusiastic and happy about the fact that ETFs bring more mainstream attention to digital assets, brings more participants that are taking exposure to the market, which of course has a positive price impact and is a nice development by having this extra distribution channel. But we need to also be conscious of the fact that this is not really taking us closer to having fully digital finance and having this optionality between centralized and decentralized. We don't. It's a bit of a sidestep. So okay, let's guys, what we're building here makes sense. Have a look, take some exposure as well through this because it makes it easier for your pension funds to do so. But fundamentally, it's not getting us closer to really where the objective is, right? But in the meantime, it's been great for business.
But it's kind of crawl, walk, run approach for the conservative industry or like for the mass adoption. It's like a first step for them to touch the ground, and then they can evolve into the centralized exchanges and then the DeFi space as well. So
I agree. So it is a positive development, right? But it's not. What I mean is that it should remain a mean to an end. So it is a way to get more attention and more participants to make it easier for traditional players to participate. But this is not the end goal, basically. Like just taking all of crypto and putting it back in the old system is not what we're here for. So I think it's important to keep that in mind.
So it's basically our responsibility to bring the innovation so that when all of those investors trying the Bitcoin ETF with the TradFi infrastructure, they will find it more attractive to transition into the digital asset native space.
And then you can actually take that ETF wrapper out and have the same asset and don't pay the fees, which is better.
Exactly. So if we talk about the next big thing for the industry, because this year, like first was the ETF, then like the retail space was awaiting the halving. So right now, do you have a sense that this kind of lack of the next big thing that should drive the mass adoption? And I'm not talking about the institutional space, but just for the mass retail, and there was a sense of perception that everyone was waiting for the ETF, then everyone was waiting for the halving. So what's the next big thing for the industry in terms of like the mass adoption?
I mean, I think that I'm always very interested in RWAs because this is so real world assets, just representing everyday assets in a new way that are fully digital, that is easier to transact into exchange. For me, that's the end goal, and so I think that the mass adoption will come from that. But I don't think it's going to be like DeFi summer and just massive explosion for 3 months and then boom, we have something new. I think it's something that's going to take a lot of time. So I expect it to have a less explosive growth, but on a more sustained kind of a period, right? So, but that is kind of the trend I'm the most focused on. But we're talking about multi years.
Yeah. Or maybe like what can help if like Taylor Swift tokenizes the tickets to her concert?
Maybe, yeah,
that would help
maybe
the mass adoption.
That is a real world asset. So maybe those things will happen, right?
There should be a nice secondary market for that.
I'm sure there would be. There already is actually.
Yes.
Not on tokens though.
Yes, unfortunately, would like to list those on Finery as well.
I didn't know you were a big Taylor Swift fan.
Well, not personally, no. I'm a fan of secondary markets. When there is an opportunity, I'm happy to take it. But so, what do you think besides the the RWAs? Any other big innovations happening in the space? What like drives you? What's keeping your attention?
There are loads of innovation, right? Loads of kind of marginal improvements to existing concept, like something being more decentralized, changing the way that you can create greater capital efficiency. We see new markets being built as well on different assets. Like I remain a big fan of NFTs. Honestly, it kind of deflated a lot after the craziness of 2 years ago, but it's still something that makes a lot of sense. Being it art, being it in gaming, I think that it is something that we look at very closely. Like Keyrock, we are active as liquidity providers on NFTs, and so it is something that I believe can be a driver of a lot of adoption. As you mentioned, when you think about it, a ticket is assigned to a seat. It's something that is meant to be unique, that is meant to be non-fungible, and NFTs make a lot of sense. So that is something that we keep following, and so we see loads of innovation. It's just that honestly, what is the one that will drive like the big mass adoption? I don't know. If I knew, I would be building that, right? But I don't know what it's going to be, like which vertical. What I know is that it is going to continue to grow, and therefore it's a market that will continue to need liquidity and market participants, and that's why we are there, Keyrock, as a infrastructure layer, right? But what is exactly the vertical is just that I don't know, honestly.
Well, we'll see. I guess we'll need to stay awake and monitor. So, kind of concluding the podcast, what the future looks like for Keyrock. So how do you see Keyrock? Like, is it evolving into the multi-billion like investment bank, and like what are the steps to that path?
I mean, definitely, like I say, we want to build one of the largest institution in the world. So I think that that's what we've been working for 6 years. It's going to take probably a few more years, but yeah, I do think that there are tremendous opportunities in this market. As we're just digital assets are basically rebuilding finance completely on new foundations. But a lot of the products and the services that were needed in the existing traditional world are still going to be needed, and hundreds of new ones are going to be built because the decentralization, the composability, all of this brings kind of new use cases, that we've never thought about. So what it's going to take for us is just to continue to build product and services that make sense for our clients, being all the institutions on more the OTC and transactional side, all the token issuers and the builders that we participate with and that we help on the token market making, the ecosystem development, and keep on building products and services that help them to achieve what they're actually building. So it's there's definitely still a lot to do. So we keep the head down and keep moving forward. That same logic of what do we need to do to be the biggest in 10 years, and keep optimizing on that long term to build things that make sense.
Well, so good luck on your journey. I guess we'll all need to be working hard for the next few years in order to bring the industry to the next level. So Kevin, thanks a lot. It was a pleasure, and thank you everyone to listening to the podcast. Hope this was helpful, and we'll be looking forward to the next big thing in the industry. And please stay tuned and follow us on Spotify, YouTube, and all the other channels for the Flow podcast. Thank you guys, and
thank you very much. Thank you, Constantin.